I think that the data that I have shown you today would support the development of this project, and we think it has great promise.
And welcome back to Liquid Lunch. It's me and Sandra, and we're
having a great time.
Yeah, we're having a good time.
We're really happy. And we're happy. I don't know. He's contagious because I feel like I'm on this happy high.
I'm going to read the book because
I think
sometimes,
so too.
as you said, you get depressed and you don't know your way out of it.
Yeah.
And sometimes you might need something that's going to make you cry.
I think so too. It's a great.
Make you realize how good you got it. But we're back here, and we got Joe the Investor joining us. Joe, always great to have you on the show.
Yes, thanks.
So what are we talking about today? Here we are. It's past March 22nd, the day everything was supposed to go crazy. We're almost in the middle of 2012, and we don't even have any financial crises. Everything's just going groovy, right, Joe? What's going on?
Or is it?
Well, I wouldn't say that.
Okay.
Well, it's quiet the last couple of weeks. What I want to talk about is the news, the signals I'm getting from the news.
Okay.
Because they're a little bit. I'll give you a couple of examples. So, the U.S. unemployment rate.
Yeah.
They've been talking about that for months, and they said, well, it's 8%. It's better than it used to be, but people are saying it's not that good, and there's sort of conflicting interpretations. But the way the markets are reacting, it's all positive. That there's a major recovery that's taking hold in the U.S.
Well.
And so I'm trying to highlight, they're saying this about the job number, but the underlying facts are that a lot of people have given up looking for work. A lot of students don't have work. There's a lot of issues still.
So that would skew the numbers then? Is that what you're saying? If people have...
It's not in the numbers.
Okay.
And that's why people are...
No, okay. The unemployment rate we know is bogus. It's a bogus statistic because they take the people that have given up, that have no hope, out of that equation, right?
So then it looks better.
So it looks good because these people aren't looking for work now. They're living on the street, so that's good news. Unemployment is down. But on the other hand, there are numbers like job creation numbers. In other words, how many jobs were created, for example? And if that's a large number, then we know that is good news, right? What are the actual job numbers for the U.S.? Because I did hear that there was some surprisingly strong job creation in the U.S. Is that accurate?
They did say that. Now inside that number, there's this story. Which jobs are they? And how long are they going to last?
Like, are they jobs, part-time jobs? Are they low-paying jobs? Are they jobs?
They're all put together.
Are they service jobs, manufacturing? What kinds of jobs are they? Okay, so that too is not a true number either then. Is that right?
So, well, that's what I'm getting at is when people see these numbers and see these news releases, just step back from it and look at everything leading up to that situation and say, okay, what do I get out of it? So the unemployment rate is one number. The other one's the housing number. And they've been saying there's stability and there's recovery. But I looked into the housing number and it's the same thing. The first-time buyers are a third of the buyers. Another third are investors. Investors looking to flip or make money on a foreclosure.
Or Canadians who have not yet suffered from the bubble, right?
A lot of them are Canadians, a lot of them are Chinese, a lot of them are European. But that's a lot of people that are not in the typical model of first-time buyer, get your house, continue on, get a bigger house, continue on. These are people trying to exploit.
Sure, but...
So the numbers don't tell you that. You have to...
Let's just talk about that for a little bit. First of all, a third of them are first-time buyers, so that's a good solid statistic. The other interesting thing is that there was a study done about what is the proper, for a good, solid economy, democratic country, what is the percentage of home ownership versus people who are renting, right? And I think it's around 65%. In different countries, Canada, U.S., 65, 67% of people own their own homes. Okay. And and that's been a long-held statistic that's been fairly consistent over a long period of time. So maybe in the bubble, that percentage actually went up a little bit. Maybe it went up a little too much. And so investors coming in, even though it's going to reduce that number, perhaps, of home ownership, people who live in their own homes, reduce it a bit, maybe it's going to bring it back to a more natural number.
Okay, but you know what?
Although I
Okay,
tend to think everybody should live in their own home.
I gotta say that's a crock.
Okay.
Okay, and that whole home ownership thing is so overrated because, okay, yeah, you have a home. Is it paid off? Okay, let's find out how many are paid off. Otherwise, you're just a rent owner. You're just renting. You know, sure.
I know.
Sure, you're renting for 25 years.
Well, well, interesting you should say that, Sandra, but there is a big psychological advantage. Except this compound interest thing's
Okay,
gotta get out.
so I know Joe's here and we're talking about finance, but I just have to say, okay, you know, in North America, the dream is to have the home, right, as a financial success. Other parts of the world, they think owning is crazy. They want to rent. They don't want that kind of attachment, that kind of 25-year commitment. Other parts of the world, they would rather take their money and do something else with it. So you're right about the psychological, but owning a home is not necessarily the way to go, is what I'm saying. Especially if you're owning it for 25 years. I mean, you owe it
Yes.
for 25 years, sorry.
Yes.
Okay?
There's pros and cons on both sides of those. But Joe,
Okay.
we're looking at these numbers. What does that tell us about the U.S. economy? I think that's what we're trying to find out, right?
Well, it tells me that we're not really sure what's happening. It's sort of a dual situation. They're giving you this recovery idea, but there's also another idea that says, well, we're kind of still where we were before. And we're not sure if it's going to really take off yet or not. So I guess I'm just saying
So don't believe everything you hear? Is that what you're saying?
well, look at both sides of whatever you see, whatever you hear, and see if it actually sticks.
So dig
Because sometimes
deeper.
it doesn't. And digging deeper is how you find out what that number is all about. And the US is the two I've seen, but there's other ones. The one I've noticed now is China. Up until now, China's been the engine of the world. They grow at 10% and everything's made there. And lately they're starting to slow down a little bit. And what I read recently was they had a manufacturing number that was positive, but right underneath they said, yeah, but this time of year it's always positive because it's March and the Chinese New Year started, and
Okay.
so there was this qualifier, and they've never done that before.
Is
They
that the
always just
small
said-
print too, Joe? Is that like you have to really, really...
Well, no, it's in
Sorry.
the first paragraph.
Okay,
But just the fact that they're saying this is a difference from China is going to rule the world forever and don't think about it. So now it's becoming, I'm not sure about China.
Being a
Is it
superpower.
going to slow down? Is it not? And I reflect, I look at the past in the States in the 90s and in the 80s. When there was a slowdown and the interest rates got reduced, the markets actually rallied because they look ahead and say, oh, the rates are going to go down. That's good. Everything's going to boom again. In China, that's where they are now. Where they're supposed to get ready to boom again. And yet there's this, they're focusing on the slowdown, and up to now they never have. So there's this shift that happens every so often in what they report, how they report it.
Now, here's what I heard about the Chinese statistics, is that they're just made up. They don't really have, I heard from somebody that in China, they just make those numbers up. You know, somebody at the Ministry of whatever just comes up with those numbers. They don't have the really in-depth kind of analysis of what's really going on in the economy to be able to report reliable growth or whatever statistics you're looking for, that they're just making it up. So,
And if that's true, the problem is a lot bigger because everyone's been betting on 10% China for 5 years. And what if someone comes out today and says, oh yeah, we just made that up?
well, why should we care about what's going
there.
on in China? Because 10% growth, whatever grows in China means we're shrinking here, right? Unless you're an investor.
So that's why we would care, right? Because it does affect us.
Well, overall, that's probably true, but like for Canada, for example,
Yeah.
we make a lot of money from China
we
'cause-
make a lot of money from China.
because they're buying all our commodities.
Okay.
And they use those commodities to make the stuff and then send it back here. So we're tied more closely to China than the U.S. is.
There's some. Okay, Joe. Any other things you want to? Are there any other things?
Examples?
The China. Okay, so China's a thing, and again, we don't quite know what it means or whether we should believe the statistics. Is there any other economic stories that we should be paying attention to?
Well, the other one is Europe,
that was my
but Europe
question.
is more obvious. I mean, they've said Greece is in trouble. Now all of a sudden Greece is gone, but people are saying, well, it might come back, and Spain might come back. So
What happens if they're done? What does that mean?
Yeah. What do you mean?
what happens if?
What does that mean? How does I mean?
What do you mean done?
There's still people that live there. What does that mean done?
Well, done as in the crisis is done.
Oh.
It's over. The crisis has been resolved
Oh.
or averted or whatever. Is that what you mean?
Yeah.
Because they've come
The
to some kind
attention
of
is
agreement.
taken off of Greece and has moved on to someone else.
And there's other stuff that could happen, Joe. I think that nobody is really, other things that could totally pull the rug out from all this kind of day-to-day analysis. I mean, if there was a big war, that could be a problem, or
If
that's
China
going to
calls
change
in
everything.
their debt from the U.S., right?
They won't do that.
Okay.
It wouldn't be in their interest, I don't think.
Okay.
Joe might think otherwise, but, or even something like that video we showed earlier. If all of a sudden everyone is is off the grid, not buying oil, they're going to have so much money for other stuff, right? Then there's the whole issue of globalization, because sometimes I think it's like
The one world government, you mean?
well, all I'm just saying is that there's been a long-term trend towards taking away trade barriers, right? And this has allowed global corporations to set up shop anywhere. We can't protect, or we don't protect, our domestic industries here in Canada. The good news is that we get to buy cheap stuff from China. The bad news is there are no jobs. Right?
So it has to be cheap because we can't afford it otherwise.
That's the trade-off, right?
Okay.
That's the trade-off. And they're saying that this is, in balance, better in the long run for the global economy. Joe, is there going to be any, are we going to, do you think, see a rekindling of national trade barriers to protect domestic industry?
Yeah, I think we'll see that.
Yeah.
It's already, I've already seen it.
Where?
I've seen attempts
We
at
haven't
it.
seen it in Canada. Stephen Harper isn't talking about that. He just let those Americans close the Stelco plant in Hamilton.
Here, well, no, Canada's not an example of that. Australia's been doing some of that. The UK, South America. Well, South America's kind of interesting. They're opening and they're closing at the same time,
Yeah.
depending on
South
what you're
America is
looking
very
at.
interesting, yeah.
But
So-
and there's a lot of talk about it.
Mm-hmm.
So
which
in
before
your
there
opinion,
wasn't.
Joe, are we better off today than we were this time last year?
I think it's about the same.
Okay. Even though they would have us think we're better off.
terms of
Unemployment
the
is down and housing. That's the other thing. Real estate in Canada is going crazy, isn't it?
And okay, Canada's another point about the news. So real estate in Canada is booming. I think everybody sees it. The condos are everywhere, etc. Underneath that, it looks like the government wants to slow it down, but they're not really. I mean, they're saying to people, save more money. That's one thing. Doing that will slow it down. And the other end of it is the mortgage rules. They keep changing them.
Tightening
And they're tightening
it
them.
up a little bit.
And that,
Really?
by default, will slow it down.
Yeah.
Are they going to increase
However-
the interest rate too?
Well, that they're not going to do.
Nobody wants that.
Well, I'm not saying I want it. I'm just
No,
saying.
I'm just saying, Joe, please.
And they're not going to do because I think the interest rate now is becoming international. It's becoming global.
Oh.
In terms of what we do was affected by what the U.S. does, Europe does, what everybody does. If we run out and raise our rate to 10% and no one else does, it'll distort everything very,
Okay.
very large. In the past, people didn't really think about it because we had our national barriers, our trade rules, but now everything's being open. If someone decides to deviate and everything's wide open, everyone will just leave and run to the low.
Right.
Or they'll all come into the high interest rate
That's
if they're
actually a
buying
really
the
good point.
bonds.
Right.
And that didn't happen 10 or 20 years ago. So I think now the government is saying, well, yeah, we could raise rates, that would do it, but there's all this side effect. So instead of that, let's go in there another way through the back and change the rules.
Here's
That's interesting.
Yeah. My impression is in Canada that they really have, since 2008, they've done what they can to kind of take some of the pressure off the housing market, to slow it down a bit, right? Which is the right thing to do, because we don't want the same thing to happen. And they've made some changes, and yet, despite that, they have not been able to cool the market. And I sense that despite those judicious attempts, that the market is running away like crazy. And
here's another factor in that.
Yeah.
20 years ago, we bought the condos, the Canadians who lived here.
Yeah.
Today, we're buying the condos, but a lot of them are bought by investors.
Offshore investors?
And for them, they pay cash a lot of the time, and for them, it's cheap. A condo anywhere else in the world is much more expensive. Europe, Asia. This is a
Really?
bargain. So they'll keep buying here because they can, and then they rent them out or they sell them.
Or and it's just an asset
It's a
for
different
them.
market.
It's a safe, it's a safe haven
it's
if they ever
safe
want
as
to come
well.
to Canada. So this tells me too, as you're talking about interest rates have become internationalist or global, the real estate market too
is becoming
is
global.
becoming global, so that maybe it isn't a bubble that's going to burst. But the stories I hear about bidding wars in Toronto this spring,
They're like they're going 100.
even after the government is doing their very best to cool the market down, and yet it's Toronto. I mean, who wouldn't want to be here?
Well,
Seriously.
Absolutely. But I think another point, and I don't know if it's even valid, but to me makes a lot of sense, is Toronto, Canada has still a lot of space where we're building. We haven't saturated our space, so we can build more houses, which means we can sell more houses, which means more people can buy.
And live here.
Exactly. Yes, it's outside of the GTA, but we still have like Milton and Orange, all these places we still have lots of space to grow.
Yeah, we still have some arable land that we haven't paved over yet.
And some wildlife that we haven't all killed yet.
Yeah.
And sent away.
When are we going to kill all that wildlife and make
if
sure
you
that
have
we
a
can't grow
coyote in your
anything,
backyard,
Joe?
it's because they have nowhere else to go. It's not because they want to be in your backyard.
You know what? Here's the solution. When those fuelless, free energy devices come out, you'll be able to build a fabulous greenhouse home up in the middle of northern Saskatchewan. Okay, you have all the
Sounds
free
good.
energy you need, grow all your food, bananas, everything, and we'll be able to have not just live like on the small strip of land near the border.
And then we can have all the animals can have their space. We can have our space. We can all cohabitate and
Exactly.
live together.
Do you want to cohabitate with animals, Joe? Okay, Joe. Is there any other points you want to make here today?
So I'll say one more thing about
Okay.
the Canadian, the government. So an assumption you got to remember about all the tightening and expanding, it's based on credit. The interest rate is based on credit. The higher it goes, the tougher to get a loan, the more expensive people pull out. But if you're an investor with cash, that doesn't bother you. If you're somebody who's a trillionaire and who's buying subdivisions at a time, that interest rate doesn't mean anything to you.
So
You're buying it.
So again, that skews the numbers once again.
So these efforts don't work on them.
Okay.
They'll only work on us. And so if you're slowing part of the engine down
Wow.
and not the other rest
Wow.
of the engine, it's going to keep going until something says to them, okay, this isn't worth it anymore, and then they all get out. Just the way in the stock market, they all get out. So it's a different game now than before.
very interesting.
And people looking
That
at
is
the
really-
trend are saying, oh yeah, we'll just make it hard to borrow and that'll be it. Well, that's assuming everybody borrows. And the workers borrow, but these investors, some of them borrow, some of them don't.
Well, it's interesting because when you're bidding on a house now, you're not just competing with another Canadian who wants to live in Toronto. You could be competing with somebody
Anybody.
international. How do you compete with that? Because they don't have the same issues that you. So if you say, okay, we're going to sell this house conditionally, if you're, it's a whole nother dynamic. Wow.
Well, Joe, it just goes to tell you that economics what do they call it, the dismal science or whatever, but it's more of an art form. And you know, you have to approach it with new approach. That's why Keynes was so good back in the day, because he came in with a new approach when everybody else was looking at the old way. Now, Keynesianism may not work today, but something else will work today. But you have to take all these different changing factors into account. Economics is always a different game today than it was yesterday.
So Joe, come up with that new Keynesianism thing. Come up with the new approach.
The world is working on it.
Okay, Joe. So now we know you do a show here at that channel, and you've got
Called The
a
Cube.
website. And do you want to tell people how they can get in touch with you?
Yeah, the website, joetheinvestor.ca. I have a contact page, and it's got all my social media links. The show is the Cube Talk Show, and it's under In the Media. There's a tab called In the Media, and when you hover over it, you'll see the
Cube as in
menu.
QB, right?
QB, that's right.
Okay, Joe, always a pleasure to have these conversations.
Thank you. That was really enlightening. Very,
Yeah.
very interesting.
Oh, good.
All right.
Okay.
So let's take a little quick break. Let's see now. We are going to, I don't know, we got this North American Union thing. Now that's going to solve a few problems, right? If we could just
Yes.
join together with the U.S. and Mexico, we'd all be a lot better off.
Yes.
So let's
Yeah.
watch this little video, and we're going to come back with Kate Ashley Mullen right after this.
From the beginning, man is sinning against you. Don't you know we hate you? Don't need to hold you down to rape you. Just take you, date you, young, manipulate you, impregnate you, and procreate you. You wanna rush, but I'm begging you to wait, boo. Just hesitate, cause I'm trying to educate you. Open your eyes, now I'm trying to